What's going on? My name is Simon, and in this video I'll show you step by step how to trade futures on KuCoin. We're going to be covering everything you need to know, so after watching this video you'll be all set and ready to make your first trade in the futures market. If you don't already have a KuCoin account, make sure to use the first link down below in the video description to sign up for your KuCoin account. By using that link you can get a sign up bonus of up to $500 as well as a 10% trading fee discount. So let's dive right into the video. First thing we're going to do is log into our KuCoin account. Once logged in, we're going to go to Derivatives on the top menu. Here we have some different options: Futures Classic, Futures Lite, and Futures Brawl. If you're serious about trading futures, then Futures Classic is what you're looking for. Futures Lite is just a simplified and very limited version of the Futures Classic trading interface. And Futures Brawl is basically a game that you can play against other KuCoin users, betting on if a price will move up or down. In this video, we'll look at Futures Classic, as this will give us all the features we need to trade futures. So let's click on Futures Classic. That will take us into the trading interface. First thing I like to do here is change to the dark theme because it's a lot better for the eyes, especially when you look at the trading screen for a very long time. So we can come over here, click on Layout, and change the theme. In this video, I'm not going to go in depth on what everything means on the screen, as this is a futures trading tutorial. I assume you've already done some trades in the spot market and you already know the basics. If you are a complete beginner, I recommend watching my beginner KuCoin tutorial that you'll find down below in the video description. Overall, the future trading interface looks kind of similar to the spot trading interface. We have the price chart in the center, we also have the order book, the most recent trades, and the window where we can place our orders. Now, before we can trade futures, we'll need to transfer some funds to our futures wallet. To do that, we're going to go down to the bottom right to the Assets window. Now, if you don't already have some funds on your KuCoin account, you can simply click on Buy Crypto to transfer funds onto KuCoin. In my case, I already have funds in my KuCoin main wallet, so all I need to do is transfer over those funds to my futures wallet. So I'm going to click on Transfer. Almost all futures on KuCoin are settled in the stablecoin US dollar Tether. That's why I'm going to transfer over USDT into my futures wallet from my main KuCoin account. And I'm going to transfer over 100 USDT. And now under available balance, we can see 100 USDT that we can now use and trade with. Now we can choose the future contract that we want to trade. Over here we can find all the available future contracts. But first let's go over what a future actually is. A future is basically a contract saying that we will buy or sell a specific asset at a set price at a specific time in the future. So for example, when we are trading a Bitcoin future, we are not really buying or selling Bitcoin itself like we would do in the spot market, but we are entering a contract saying that we will buy or sell Bitcoin in the future. So for example, when we go long on a Bitcoin future contract, we expect the price of Bitcoin to go up. So we enter a contract saying that we will buy Bitcoin at a later date, but at a price which is determined right now, which is usually close to the current Bitcoin price. So let's say we go long on a future contract for one Bitcoin at a price of $25,000 per Bitcoin. On the delivery date, which is when the future contract expires, we'll have to look at the Bitcoin price to see if we actually made a profit or if we've lost money. If at the delivery date, Bitcoin is trading at $30,000 per Bitcoin, we've made $5,000 in profit because we have locked in the price of $25,000 per Bitcoin when we entered the futures contract. On the opposite side, if at the expiry date, Bitcoin is trading only at $20,000 per Bitcoin, we have lost $5,000. Unlike in the spot market, future contracts also allow us to profit when assets are going down in value. So for example, if we expect the Bitcoin price to fall, we will go short on a future. So let's say the current Bitcoin price is $25,000 and we go short one Bitcoin. That means that we agree to sell one Bitcoin at $25,000 in the future. If Bitcoin actually falls to $20,000 until the delivery date, we'll make a $5,000 profit, and if Bitcoin rises to $30,000, we lose $5,000. So when trading futures, we are basically speculating if the price of an asset will go up or down. In practice, we don't actually need to wait until a future contract expires to get out of our position. If we want to close our long position, all we need to do is open a short position for the exact same amount, and that will cancel out our long position, getting us out of the trade. The profit or loss is equivalent to the difference in price when we open the long position and when we open the short position. And even though we might enter a future contract about buying or selling Bitcoin or any other underlying asset, in practice we don't actually need to buy or sell the asset itself. Instead, we can just use any available asset as collateral, also called margin, to fund our trade and pay up when we close our positions. On KuCoin, we have USDT-M futures and CoinM futures. USDT-M stands for US dollar tether margin futures, which means that these futures are settled in the US dollar stablecoin USDT, so we need to have USDT on balance to trade these futures. CoinM stands for coin margin futures and means that these futures are settled in coins, so we would need Bitcoin, Ethereum, Polkadot, or Ripple to trade these futures. Most people trade USDT-M futures because it does make sense to use a stablecoin as margin rather than an asset like Bitcoin or Ethereum, which fluctuates in price a lot. Also, there's a lot more contracts to choose from in the USDT-M future market. So let's look for a Bitcoin future contract by typing in BTC. Here we can see that we have 2 perpetual future contracts and 1 quarterly future contract. The quarterly future is the one that has a delivery date or expiry date, which is the date when our position would be automatically closed. So here it would be September 30th. The 2 first digits are the month and the last 2 digits are the day of when this future will expire. The perpetual futures, on the other hand, don't have a delivery date, meaning they will never expire and we can stay in our position until we manually close them. So we don't need to worry about our future expiring. On KuCoin, almost all future contracts are perpetual contracts. So let's go ahead and choose the USDT-M perpetual future contract for Bitcoin. Then here we can see the price that this future is currently trading at, which is the same price we can also find here in the order book or here at the top for the most recent trades. Usually the future price is very close to the current price of the underlying asset, which in this case is Bitcoin. Then what's special for the futures market is that we also have a mark price and an index price. The index price is the average Bitcoin price across multiple different exchanges, also outside of KuCoin. The mark price is then calculated from the index price and the funding basis, which we're going to look at in a moment. KuCoin uses the mark price as a basis for liquidations. Liquidation basically means that KuCoin will automatically close our position whenever the price moves too far against us. The reason why KuCoin doesn't use the actual last price to determine when a position should be liquidated is to avoid unnecessary liquidations whenever the market is highly volatile or is being manipulated. So the mark price represents a more fair price to determine when a position needs to be liquidated. Then we have the funding rate. This is specific to perpetual future contracts. Because these contracts don't have a delivery date to settle the contracts, exchanges use funding rates to ensure that future prices and index prices don't move too far away from each other. This is achieved by having traders with a long position pay traders with a short position or the other way around, depending on if the funding rate is positive or negative. When the funding rate is positive, the price of the future contract is usually higher than the index price. In this case, traders who are long pay for short positions. When the funding rate is negative, then the short positions pay for long positions. On KuCoin, that happens every 8 hours, so 3 times a day. And here we can see a countdown of when the next funding will take place. So let's say trader A is currently in a long position worth 10,000 USDT and the funding rate is plus 0.01% when the countdown hits 0. In this case, the funding for trader A is 0.01% of 10,000 USDT, so 1 USDT. This funding of 1 USDT will then be paid from trader A to trader B, who holds a short position worth 10,000 USDT. When the funding rate is minus 0.01%, then trader B would have to pay 1 USDT to trader A. However, if we close our position before the funding settlement countdown hits 0, then we are not participating in this funding settlement. Now let's look at leverage. Leverage trading is one of the main reasons why people want to trade futures in the first place. Using leverage simply means we are able to exaggerate our profits, but also our losses. Here we can adjust the leverage for our trades. It goes from 1x all the way up to 100x, which is insanely high. So for example, let's say we choose a 10x leverage and the Bitcoin future is currently at $20,000 per Bitcoin. With a 10x leverage, we're able to buy approximately 10 times more than the amount we have in our futures wallet. So if we want to buy a future of 1 Bitcoin, it will only cost us around $2,000, so a tenth of the actual price. If we go totally crazy and choose a 100x leverage, we would only need to pay $200 for a future of 1 Bitcoin. If then our Bitcoin future goes up just 1%, we have already doubled our $200 investment. So you can see why using a high amount of leverage can seem quite attractive. However, on the other side, if Bitcoin goes down just 0.5%, we would get liquidated and lose our entire $200 investment. So at that point, even if the future goes back up, we are already liquidated and we can't make any profit from an increase in price. So as you can see, using high leverage can make a lot of profits fast, but will also wipe us out clean very quickly, especially in a volatile crypto market. So now we know all the basics and we are ready to place our first order in the futures market. Again, over here, we're going to choose the future contract that we want to trade. I'm going to choose the Bitcoin US dollar Tether Perpetual future contract. Now here on the right side is where we can place our order. We can choose between a limit and a stop limit order. For now, we're going to stick with limit, and later in the video, I'll also show you how a stop limit order works. When we click on this bold icon, this is essentially going to make this a market order, meaning that it will just take the best available price in the order book and open our position immediately. So let's just do that for now. Then I'm going to choose a 5x leverage, which means I'm able to open a position worth about 5 times my margin balance, which currently is 100 USDT. Here we can either enter an amount of how much in Bitcoin futures we'd like to buy, or we can just select a percentage of our margin balance to invest. So let's go ahead and choose 50%. Down here, we can also see how much we will be investing for this position. Because we have a 5x leverage, the size of the position will be around 5 times our investment. And then let's say we believe that the Bitcoin price will increase, so we're going to click on buy long. Then we're going to have to confirm our order. Because it's a market order, it has been filled immediately and we can see it down here under positions. The contract name appears in a green color, which means that this is a long position. Next to the contract, we can see our position size, the current value of our position, and our entry price. Here we can see the allocated margin for this position. This represents how much we have invested into this position and how much we could potentially lose if the price moves in the wrong direction. Then here we have the mark price and the liquidation price. If the mark price reaches the liquidation price, then liquidation will be triggered. The more leverage we use for our trades, the quicker we will reach the liquidation price, which essentially means more risk. However, we can always add margin to our positions and thereby reduce our leverage. We can simply click here and allocate more funds to this position. As we can see, this will lower our leverage and decrease the liquidation price for our long position. We can also automate adding margin to our position by turning on the auto deposit margin feature. When this is turned on and our position is getting close to the liquidation price, then KuCoin will continually add margin from our available balance to this position to avoid liquidation. So using this feature can lower the chances of getting liquidated. However, it can also lead to losing our entire available balance in the futures wallet if eventually our wallet balance hits 0 and we do get liquidated. So definitely be careful when using the auto deposit feature. The unrealized P&L, profit and loss, shows us how much we would profit or lose if we were to close this position right now. Then we also have the realized P&L. This shows us exactly how much we have profited or lost selling a percentage of our position, as well as the fees involved with opening, holding, and closing this position. If we want to get out of the trade and close our position, there are a few ways how we can do that. The quickest way is to simply click on Market, choose 100%, and then click on Confirm, and that will close our position immediately at the best available price. Or we can click on Limit and set our target sell price. Then once we click on confirm, we can see our limit sell order under open orders right here. Once the price hits our target price, our position will be automatically closed. Of course, we can also cancel any of our orders by just clicking on cancel. Another way to close our long position would be to simply place a short position for the exact same amount. So we can come over here and enter the size of our open long position. But now we will go short, so we click on sell short. And that will cancel out our long position and get us out of the trade. If we don't want to close our entire position, we could also just reduce it. So let's say we want to reduce our position by 50%. We can just click on market, choose how much of our position we want to sell, in my case 50%, and then click on confirm. If we want to reduce our position at a specific price, we can click on limit and type in the price right here. And when we confirm, we have a new sell order of 50% of our position at our target price. If we want to increase our position, we'll have to do that up here. So let's say we want to double our current long position. What we're going to do is look at the current value of our position and enter that amount right here for the next order. Then we simply click on buy long, and that will add that amount to our current long position. Let's do another example, but now we're going to go short Bitcoin. So we believe that the Bitcoin price is going to decrease. I'm going to do another market order, so I'm going to click on this bolt icon, and I'm going to use the slider to set a 3x leverage. Then I'm going to invest 50% of my balance into this position, and I click on sell short. Under our open position, we can now see that the contract name appears in a red color, which means that this is a short position. We also see that the liquidation price is above the current Bitcoin price, which makes sense because we are going short and we want the price of Bitcoin to go down. However, when the price instead moves in the other direction, we're losing money on this trade. And if the price goes all the way up to the liquidation price, we will get liquidated. In order to manage our risk, we can also set a take profit and or stop loss for each position. All we have to do is click on this edit icon under take profit and stop loss. And then here we can set our take profit price, which means that when this price is reached, then the position will be closed to lock in our profit. For the stop loss, we can do the same thing, just set a target price where we want our position to be closed at to limit our losses. When we click on confirm, we can see our take profit and stop loss prices here. We can also already set our take profit and or stop loss before we open a new position. We would just have to activate the TPSL function, which stands for take profit and stop loss. For long positions, we take TPSL of long, and for short positions, TPSL of short. And then we just enter our take profit and stop loss before submitting the order. Until now, we've only been using market orders, but of course we can also do limit orders as well. We just need to make sure that the bolt icon is deactivated so we can set our entry price here. We put in the order by going long or short, and it will be visible right here in the open orders tab. It will stay here until the future price reaches our entry price, which is when it will automatically open our position at that specific price. Then we also have the stop limit order. With a stop limit order, we're able to set a price range for wherever we'd like to open our position. So for example, we can tell the system that we want to go long when the Bitcoin future price goes up to 22,000, and we are willing to buy in at any price between 22,000 and 23,000. Using this type of order makes sense whenever the market is very volatile, because then we're basically giving the system a price range where it's allowed to open our position in. If we just use a normal limit order, the system is only allowed to trade at our specific entry price. But with a stop limit order, the system is allowed to take the best price within the price range we have set. And when we click on this bolt icon, we make this a stop market order. In this case, we are telling the system at what price the market order should be triggered. So as soon as our stop price is reached, our market order will be fulfilled at the currently best available price. By now, you've probably also noticed the reduce only option right here. Whenever we activate reduce only, the system will only allow us to reduce our current position. So for example, let's say we have an open long position for Bitcoin. Now, when reduce only is activated, the system will not allow us to increase our long position, because as the name says, it's reduce only. We also cannot put in a sell order that is larger than our current long position, because that would mean that our long position would not only be cancelled out, but it would also change into a short position, which isn't allowed with reduce only activated. So again, like the name says, whenever reduce only is ticked, we can only make our position smaller or cancel it out altogether. So basically, it's just a safety feature to make sure we don't make any mistakes when wanting to reduce our position. Whenever you want to turn on or off specific features, just head over to the preferences right here and then make those adjustments. If this video was helpful to you, please make sure to go long on the like button below this video, because I can assure you it can only go up from here. And make sure to use the link down below in the video description for a sign-up bonus of up to $500, as well as a 10% trading fee discount when creating your KuCoin account.